And on the Australian dollar and Japanese yen currency pair, we can immediately initiate a buy trade. I've already recorded a video about Fibonacci levels, so you can watch it. The essence is this: if the price retraces to the 50% or 61% level and halts, there is a high likelihood of a reversal and continuation of the impulse. Now let's wait for the trade to conclude. Hello everyone, this is Mary, your dedicated trader. In this session, I'll be demonstrating my trading process for profitable trades, so make sure to watch, have a good time, subscribe, and become a part of the community. Be a part of my Telegram channel too, where I engage in live sessions with my followers and offer precise trading signals. You can find the link in the description to this video. Let's kick off our trading session with some chart analysis. There is no need to search far, and on the Australian dollar and Japanese yen currency pair, we can immediately initiate a buy trade. No need to search around. The trade is opened. Now let's delve into why I took this position. We can observe a larger sideways movement on the chart where the price moves from a resistance level to a support level and vice versa. Not long ago, there was a pretty strong upward impulse movement from the support level to the resistance level, followed by a pullback. Based on Fibonacci levels, we can see that the price reached the 50% level and reversed. I've already recorded a video about Fibonacci levels, so you can watch it. The essence is this: if the price retraces to the 50% or 61% level and halts, there is a high likelihood of a reversal and continuation of the impulse. Accordingly, I anticipate precisely this kind of reversal now, indicating an upward movement. If luck is on our side, the price might even revisit the previous high, but that might occur in about 10 to 15 minutes. For the time being, I'm waiting for strong impulse candles that will further reinforce my profit outlook. Overall, knowing and using Fibonacci levels is very beneficial when the price retraces after an impulse and you lack any other potential reversal levels. Now let's wait for the trade to conclude. Only 8 seconds left until completion. I got exactly the movement I anticipated. There was a strong impulse and the price surged upward with long green candles. Pretty comfortably, I made profit on this trade, and now I'll be scouting for similar opportunities on other currency pairs. Meanwhile, I've come across to a really intriguing situation on the euro and Canadian dollar currency pair. So what do we have here? Firstly, there is a local support zone. Secondly, a fairly robust uptrend is evident. Thirdly, the Vortex indicator has fully diverged, signaling a potential reversal. There is another support zone as well, and overall it's a suitable setup for a buy trade, which I'm going to execute now. The trading platform seems a bit slow today, but that's okay. Initiating a $300 buy trade for 3 minutes while keeping an eye on the chart, as the price might dip slightly below the second support zone. In that case, I'll open another $600 buy trade. Why this approach? Well, I'm doing this because the price could bounce off the current zone or even dip further for the second support zone and then bounce off it. It's logical to enter the trade right away and to anticipate a reversal. If the anticipated reversal doesn't occur now, I'll simply open a second trade from a stronger support zone. The second trade will offset my potential losses and generate profit. I really don't believe the price will breach the second support zone and move lower, and it's a quite robust zone and the market is currently in an extended uptrend. The price seems to have started bouncing off the first zone already, so there is no need to worry about a potential break of the zones. Yes, the price received a favorable response and the trade should close with a profit even without the offset trade. Now let's wait for the trade to conclude. Only 7 seconds left until the trade concludes, and we see that the trade is closing with a confident profit. It's a perfect outcome, confirming that support zones are effective. The price reacted within the first 15 seconds after I opened the trade and didn't drop below my entry level. Therefore, I'm locking in the profit and moving on to search for the next trade. To stay close, let's see what's happening with the British pound and Japanese yen currency pair. Unfortunately, nothing interesting here. Euro to US dollar currency pair, nothing noteworthy either. Well, there is not much to say. The market is quite challenging at the moment with very few opportunities, but on the Australian dollar and Japanese yen currency pair, there is a minor resistance zone. I'll add some indicators to get a clearer view on the market. And in Vortex and RSI, just in case, maybe RSI will provide a strong signal. No, the Vortex is just starting to diverge and the RSI hasn't reached overbought territory yet. It's better to skip this currency pair for now and check again in a minute. In the meantime, let's take a look at the British pound and USD currency pair. And here, the situation seems quite favorable. There's an upward channel forming here, plus the price is nearing the lower boundary. However, there is a prevailing downtrend on the market overall. It's possible that the trend has reversed, so let's initiate a buy trade. I'm opening a trade on the Great British Pound and US dollar, which, by the way, offers a handsome payout of 92%. I can profit handsomely from this single trade. But I will wait a few seconds and the price seems to be dipping slightly. I don't want to enter right in the middle of the channel. Alright, the price has dipped. So I'm opening a $300 buy trade for 3 minutes. I believe everything will work out here because firstly, RSI isn't in overbought territory, indicating room for further price growth. Secondly, the Vortex hasn't diverged significantly yet, no reversal has occurred. Thirdly, the price is moving quite precisely within the channel. It's perfectly oscillating between the upper and lower boundaries, indicating a consistent upward movement. Even the substantial arrow confirms uptrend. I merely wanted to showcase how the price moves within this channel, but the updated arrows on TradingView have let me down. The previous ones worked better. So the price is moving within the channel, it's reaching new highs, then dipping a bit, but not reaching new lows. Clear patterns of this kind, encompassing well-defined highs and lows, outline a robust channel. The price has been moving within for over 30 minutes. Within such a channel, the price can bounce multiple times. This trade is highly confident. By the way, it's worth checking Fibonacci levels for the downtrend to anticipate potential price reversals. Yet we haven't even reached the 50% level in Fibonacci terms. There is growth potential here and consequently potential for profit. Currently, the trade is showing plus 7 PIPs. I believe it will close with a profit of 10 to 15 PIPs, maybe even a bit more. Let's wait for its conclusion. Only 10 seconds left until the trade concludes. A satisfying plus 20 PIPs and a confident profit for me. I can start looking for a next trade. And now let's proceed with our fourth trade. Most likely the last one in this trading session. An intriguing situation has emerged on the Euro and Canadian dollar currency pair. As you can see, the price has approached the resistance zone, an old and robust zone that hasn't been tested for quite some time. I believe it's suitable to open a sell trade here. Waiting for an uptrend isn't necessary as RSI is approaching overbought territory, providing additional confirmation for a sell trade. Therefore, let's directly open the Euro and Canadian dollar currency pair on the trading platform and initiate a $300 sell trade for 3 minutes. I think the retracement is beginning right now. There was a strong impulsive movement and the price is likely to retrace now. I assume the bulls have exhausted themselves after pushing the price up for so long. If we look at Fibonacci levels, the price should retrace roughly to the 50% level in the near future, specifically to the red line. It might dip even further, perhaps down to the 61% level. Then, most likely, the price will rebound from this level, reverse, and attempt to break through this resistance zone. This trade is very confident as any impulse concludes with a retracement, and this one has probably already concluded. Moreover, the resistance zone interfered with the impulse and I entered right from this zone. This is a straightforward technical analysis, but from experience, I can say that the simpler, the better it works. Now let's wait for the trade to conclude. And there are 15 seconds left until the trade concludes, but it's already evident that I will secure a profit. I admit I was a bit nervous because the price traded right at the resistance zone for 1.5 minutes, but ultimately the expected retracement began. Everything went perfectly, just as needed to. From second to second, the trade is closing with profit of over 20 pips, which is quite favorable in the Forex market. By the way, on TradingView, it's clear that we received a substantial reaction from this resistance zone. In summary, today I've completed 4 profitable trades, a really good outcome for such a challenging market. If the idea of having me as your personal trader appeals to you, kindly use the link mentioned in the description to join my Telegram channel, anticipating our next engagement. Farewell.